Hello and welcome to another Daily Dose of Insights powered by Container xChange. My name is Christian, and every other day we bring to you the key news, stories, and data points that move container markets and hence your business. Today, we are a little bit late because I had to be a witness in a traffic accident on the way to work. Luckily, nothing happened to me, but there was a bicycle rider that crashed with a car, so slight delay here and a bit of excitement in the morning. Nobody got seriously hurt, so that's the good news. In other news, we have a MacroMonday at DDOI. Let me quickly share my screen here so that you're able to follow me a little bit more easily. DDOI, Macro Monday, we typically talk about the week ahead and macroeconomic indicators that are moving and shaping the market in the coming week. So today and tomorrow we have a high focus on sort of the euro area and the German consumer confidence indices expected to further decrease from already a low level. So not a very good light at the horizon in the euro area and in Germany, whereas actually on Wednesday data to come in from the German sort of business climate, so it's the IFO index, and that is expected to improve, albeit on a low level. So businesses start to be a little bit more positive than consumers. So let's see what that means for markets. And then very, very big news on Thursday, the ECB interest rate decision is coming up. There is a pause in its streak of rate hikes expected at a 4.5% main refinancing rate. And just to put this into perspective, I put a chart in here, which is the last 25 years of ECB main refinancing rate. And as you can see here, we're now at sort of the 25-year height, and the speed at which the interest rate was increased over the past couple of months is just staggering. And so now some much anticipated rate hike pause this week. So let's see whether this actually happens and come true. But this is the market sentiment. And then also on Thursday, we have US GDP data, quarter-on-quarter figures expected very, very positively. So still the US economy remains very resilient. However, I heard first voices on the street, so to speak, that said, "Hey, whenever the talk was of a resilient U.S. economy and a soft landing, then that's typically when the recession was just around the corner." So let's see what happens here over the next couple of weeks. And then Friday, sort of in line with that, some more data from the US core PCE price index. So it's a price index that includes food and energy prices. So it's a key measure for inflation that the Fed really likes to use for making policy decisions. Is expected slightly higher at 0.3% month on month versus 0.1% in the previous month. Typically, higher price index means more rate hikes. But as I said, there's already talk on the street with regards to the resilience of the US economy. So the question is, if the Fed keeps hiking rates to fight this measure of inflation, will it basically stall the US economy? And that's the act of balance, or the balancing act, that the Fed and the ECB here in Europe has to take right now. A lot hangs in the balance from those decisions, because if sort of the US and the European economies continue to struggle, that of course has negative implications for the demand side on ocean transportation. And we know that the supply side on ocean transportation is flooded with capacity. So any sort of shortfall on demand growth will further depress rates and lead to a very, very challenging 2024 and beyond for carriers and other ocean transportation service providers. That's it from me, from us for today. Have a fantastic start into the week. Keep monitoring those indices, and we'll speak again on Wednesday. Thanks a lot and take care. Bye-bye.